Hey guys, welcome back. I hope you had a really great weekend. Alright, so let's take a look at last week's price action before we head into next week. We had a lot of interesting things happen. We had earnings season kickoff with Netflix and TSM, and I'll go over both of those before we get into the second half. And SPY did open last week with a gap up. So Monday we pushed up, and then Tuesday we came back down to fill that gap on Monday. And heading into Netflix earnings day, we did come back above the 35 EMA. So then on Thursday, we had TSM in pre-market, which gave us a gap up. We did make new all-time highs here at 586.12, and then we came back down to the 35 EMA. Then we had Netflix earnings here on Thursday after close. We gapped up on Friday, but we never got up to make new all-time highs. So Friday was a up day. We stayed above the 35 EMA and overall had a pretty big week from Monday to Friday. So last week we did make new all-time highs, and on Friday we did stay within the implied move, which was pretty much lined up with all-time highs. And then SPX, same thing over here. We opened with a gap up on Monday and saw a push up. Tuesday we dropped back down to fill this Monday gap, and then we came back up on Wednesday heading into some big earnings, got back above this 35 EMA. Then with TSM earnings in pre-market, which had a pretty big move over there, I'll show that in a minute, we gapped up, we made new all-time highs. That definitely could be a sign that AI related stocks, that the market is still expecting a lot of growth in that sector. And then from there, after making all-time highs on Thursday, after we opened, that first candle was the high of the day. We brought it back down to the 35 EMA, bounced, and then closed underneath the 35 EMA. That took us into Netflix earnings, where we gapped back up the next day above the 35 EMA, and we did have a green day here, staying within the implied move and underneath all-time highs. So overall, S&P from Monday to Friday was up about 0.84%. And then QQQ had a really interesting week over here. So we started right here, just underneath this bear gap. Now this is the last bear gap that is between here and all-time highs. I'll zoom out in just a bit to show that. But we started the week with a gap up, and we gapped above this bear gap. So that gave us a battle zone right here that we dropped right into and underneath on Tuesday. We closed out both the bear gap and the bull gap, and we took it all the way down to the 30-minute 200 moving average. And then we bounced on that going into big earnings. So with the TSM earnings in pre-market on Thursday, we gapped up and then dropped back down to the 35 EMA before closing underneath the 35 EMA. And then Friday, we opened with a gap up above the 35 EMA, took it all the way to the top of the implied move on the day, which was 496. So if you had 496, 497 bear call spreads set up, those would have filled and closed up 100%. And just a quick side note, the other ones, SPY and SPX, those would have filled as well, but the premium wouldn't have been so good. I probably wouldn't have touched those spreads. But QQQ, since we did get up to the top of the implied move here, 496, 497, would have been a good play on Friday. And then we did close within the implied move. So QQQ did close up 0.66%. VXN closed down 4.77%, and we did close within the implied move. And backtracking it one more time here, SPY, I didn't say this, but SPY did close up 0.38%. SPX closed up 0.4%. VIX closed down 5.65%. So we're back at 18, and we did stay within the implied move, both in SPY and SPX. All right, so we just did QQQ. Let's take it over to IWM. Before we do IWM, back to QQQ. Maybe I'm just rushing this today. I'm not trying to. But QQQ here from open of the week right here. And actually we opened up, but week over week, we had just 0.25% up. And from where we opened the week right here, it was actually down 0.25%. So we actually ended up right back in this bear gap. Even though this bear gap is gone, we did kind of see it as a resistance, and I just felt like I needed to go back and say that. So now we're on to IWM. IWM had a huge week. We opened Monday right here. And what really defined IWM last week was that we made a break above this previous resistance level. I'm going to take this is 3 months right here, and maybe let's do even a little bit more. So that level was right here, previous resistance here. It was a tough level of resistance. We broke above it briefly here, and then again right here just to fill this bear gap before getting smacked out of it. So this level at 225, we made a run for last week. And then on Thursday, we actually gapped up and pushed up above that resistance. Then we saw it as support. That 35 EMA was right there, and we closed right at the 35 EMA. So really big week for IWM, and mission accomplished, getting above this resistance at 225. And now let's see if we can hold it. So that 35 EMA, we never dropped underneath it last week. It was support the entire time, and we do have a new up gap that could act as support. Definitely keep 223 in mind if we do drop underneath the 35 EMA and fill this gap. 223 could be a support level. And let's see if we can hold above 225. On Friday, IWM opened slightly up and then dropped down to the 35 EMA, and then it was pretty non-eventful from there, just stayed close to the 35 EMA. Easy, slow Friday, closed down 0.21%. RVX closed down 1.1%, so volatility still pretty elevated, 26. And Friday we did close within the implied move. And lastly, DIA. So DIA opened the week right here with a small down gap and then a pop. Tuesday we gapped down and dropped to that 35 EMA, and we actually closed just above, we closed right here underneath the 35 EMA. This was the only time we saw red candles. We did pop back up the next day, so we did not get a follow through to the downside. We came back above the 35 EMA, and then we saw that as support into the end of the week. So we came back up, we filled this down gap from Tuesday, and then from there, up gap on Thursday for big earnings. We did make new all-time highs on Thursday, and then we dropped, and when we came back up, we made new all-time highs on Fridays. So 35 EMA did catch us when we dropped down, but there was also this up gap. And remember, when gaps fill, those levels can be a support, and it's extra support when there is something like the 35 EMA right there as well. So 35 EMA caught us. We took it back up to make new all-time highs on Friday. So new all-time highs Thursday, new all-time highs Friday, and I believe new all-time highs on Monday as well. And we did close on Friday with a bearish divergence. You can see the strength lessening right here. And we did close up 0.04%, and we did stay within the implied move for the day, and also we stayed within the implied move on the week. So kicking off earnings season, the market is optimistic. We do have Tesla earnings on Wednesday, and Thursday we have Amazon earnings. And actually, before we move on, let's take a look at TSM. TSM was on Thursday in pre-market, and this was the chart that I gave for the expected move for TSM earnings. We did open that day with a huge gap up and a push, so this was on Thursday. By Friday, we had already dropped back down to the 35 EMA. I did say 200 was the top of the implied move. Look at that, 278 is where we closed the week. So TSM did stick pretty close to the expected move on that contract. And then what was the other one? Netflix. Okay, so Netflix, we did open on Friday. So Netflix before earnings, this was the Thursday before earnings. So it was Thursday in aftermarket. We did actually have a down day. That 50-day moving average was there. And then we had a huge gap up on Friday. So Friday, we opened about 2/3 of the way up the implied move, and then we pushed up all the way to the top of the implied move, which I had at 758, and then we did drop back into it and then took another swing outside of the implied move. So that was a really big move, and because we closed outside of the expected move, we could see a little squeeze here, and I think that a lot of this move did have to do with a bounce off the 50-day moving average. That is a big technical level, and prior to earnings, we did drop down to it and then see a bounce up. So the earnings could have been a catalyst for a pretty big bounce off the 50-day moving average. All right, that was a quick recap of last week. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to take better trades and choose better strikes, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. I do get back to all comments, and when I was learning how to trade, I had so much help. So don't be afraid to ask anything down below. And if something I said on my channel led you to take a really profitable trade and you want to say thank you, there is a button underneath the video that says thanks. And that goes directly to supporting me grow this channel. And that is an easy way to show appreciation. Also, feel free to share these videos with other traders who might benefit from this content. Let's keep building a strong trading community together. Alright, so starting in SPY, tomorrow's implied move is between 581 and 588, and that is from options. The 30-day average volatility is a little bit wider, 579 to 590, and the implied move on Tuesday's contract is 580 to 589. And to the upside, the very first level to look for is going to be all-time highs. We made those all-time highs on Thursday. This was after we saw TSM earnings. And then right after that, we did come back down. And for Netflix earnings, we didn't quite get back up to all-time highs. But 586.12, that is the first level to the upside. Then 588 is the implied move for tomorrow. 589 is the implied move on Tuesday's contract. And then to the downside, we do have the 35 EMA. This has been a very reliable support for the most part. The only time we dropped underneath it was when we filled this up gap from opening on Monday. So we came back down the 35 EMA. We did see a few red candles there, but we did get back above. So 35 EMA is underneath us. And then we have this up gap from Thursday going into Friday. Bottom of that gap is 582. 581 is the bottom of the implied move for tomorrow, and 580 is the bottom of the implied move on Tuesday's contract. Just underneath that, lined up right with the 30-day average volatility, 579. That also lines right up with where we filled this gap last Monday, and then we saw that bounce. So pretty straightforward trading range for tomorrow. We are starting off with a bullish setup with the 35 EMA underneath us, and that trading above the 30-minute 200 moving average. And we do have green right here. Doesn't mean we can't pull back, but we did close with that fully bullish setup. So until we break that 35 EMA, consider it a support, since it has been an extremely reliable support all the way from back here from when we bounced 2 weeks ago. And then in SPX, the implied move for tomorrow is between 58.35 and 58.95. That is from options. 30-day average volatility 58.10 to 59.20. And on Tuesday's contract, 58.25 to 59.05. And to the upside, the first level to look for is, again, all-time highs. So we did make these on Thursday right after TSM earnings. We saw that gap up. We made new all-time highs, but immediately pulled back to the 35 EMA. Then for after Netflix earnings, we did see this up gap, but we didn't see a huge push to make new all-time highs. So 58.78.37 is current all-time highs. 58.95 is the top of the implied move if we do get above that, and 59.05 on Tuesday's contract. If we do get to the top of the implied move or somewhere in here, then I would likely be looking to 5900, 59.10 bear call spreads, maybe 59.05, 59.15, but somewhere around here if we do get to this level. And to the downside, 35 EMA, huge support level, and that is right underneath us here. And if we break that, then the bottom of this up gap from Friday is 58.40. Then 58.35 is the bottom of the implied move, and 58.25 is the bottom of the implied move on Tuesday's contract. So here again, if we do break down and find ourselves down here, I'll be looking to this strike on tomorrow's contract. So 58.25, 58.15, or maybe even 58.20, 58.10. I've been having good luck wrapping around this strike. So depending on momentum, I might push out a little further, but 58.20, 58.10 is probably where I'm going to look to start. And then at the very bottom of that 30-day average volatility, we're lined up right here with this support that we saw last week. This was the up gap from last Monday, and when we came back down, we filled that gap and we saw that as support. So that is just underneath or just above the 30-day average volatility. So 58.15 for that support level right there. So then over to QQQ, we do have the implied move between 491 and 499. That is from options. The 30-day average volatility is $2 wider in each direction, 488. It's actually $3 wider on this side and $2 here, 501. And then on Tuesday's contract, 489 to 500. To the upside, I'm going to say the first target to look for is going to be 499. We do have this right here, 496. I'd probably call that 497. Could be a resistance right here. But the top of the implied move is 499, and that lines right up with where we saw resistance right here last Monday. We gapped up and we saw resistance right around 499. So 500 is the implied move on Tuesday's contract. I don't know if you guys noticed in SPY and SPX, but I did, starting this week, put the implied move. This is from Friday's contract, so it's kind of hidden in the background off to the sides. I'll only reference it if I need to, but 503 is the top of the implied move for the whole week. And that is getting pretty close to where we have all-time highs in QQQ. So all-time highs don't look like they're in this week's trading range, but they are not far away. And if we do hit all-time highs this week, personally, and this is my opinion, I would expect that we pull back away from that level. So then that's the upside. And then to the downside, 35 EMA is just underneath us, and we stayed pretty close to that on Friday. We gapped up above it, but then we did chop around, and then underneath that we have this up gap from Friday as well. Bottom of that up gap, 491. 491 is also the bottom of the implied move, so if we come back and fill this gap, I would expect to see a bounce here on the day. And then 489, bottom of the implied move on Tuesday's contract. Underneath all of that, we do have the 30-minute 200 moving average, and that is within tomorrow's trading range. Last time we saw that level was last week. We dropped down to it, and it was a pretty clear support. All right, and then taking it over to IWM, the implied move for tomorrow is between 223 and 228, and that is from options. And the 30-day average volatility is also 223 to the downside. They're both rounded out and down to 223, but this one's just a little bit higher up, and then to 229. And then the implied move on Tuesday's contract, 222 to 229. So same thing over here, 229. This is 228.28, so rounded out to 229. And this one's 228.64, rounded out to 229. To the upside, the first level to look for is going to be right around here. 227 is where we saw resistance last week. That was after we broke out from that 225 long resistance here. We saw 225 as resistance here. Then we did break out above that and we saw that as support, but we saw resistance at 227. If we do get above that, 228 is the top of the implied move, and then 229 on Tuesday's contract. Then we also have this line right here. I have no idea what that is, so let's go look. That is, okay, that is actually a really big level. So that's right here, and this is a big bear gap that we just filled when we broke out above 225. The only other time we got above 225 recently was to fill this bear gap, and to the penny at the top of this, we got slapped back down and we got hit. The rejection from this level right here dropped us 13%. So absolutely huge level to know about. That's at the very top of the trading range. And if you recall, that it was a really long gap. It went right here. That gap was opened on, when was that opened? November of 2021. So a lot of chaos happened after we did open that gap. We dropped all the way down to the 200-day moving average, which is not that far away from us right here. It's not as far as it was back here. But that is a big resistance that we are coming up to. The last time we saw that level right here, huge rejection, 13% all the way back down to the 200-day moving average. So big level to know about at the very top of the trading range. If we do get to the top, I would probably be putting some bear call spreads up here for sure, without a doubt. And then to the downside, 35 EMA, we did, after that breakout above 225, we consolidated back to the 35 EMA, and that level is right across the middle of the trading range. Underneath that, we do have that gap. This is the resistance breakout gap, so that took us to 225 and up, and the bottom of that gap is at 223. 223 is also the bottom of the implied move. 222 on Tuesday's contract. So if we do find ourselves down here, I would be looking to 223, 222 bull put spreads to bring us back into the implied move. Underneath all of that, the next support, the 30-minute 200 moving average, it's a little bit of a drop from where we are, but just know it's there if we do fall. And Stupid Willie is hinting at a possible move into this gap. If we do break this 35 EMA, that 223 level is a very likely target, and that would probably line up with an oversold signal here. So that is IWM, and lastly, let's take it over to DIA. DIA only has weekly contracts, which is why it looks a little bit different, and we only have the Friday numbers out here. So 427 to 438. And to the upside, the first level to look for is all-time highs, 433.20. And we did make those highs on Friday. We had new all-time highs Monday, Thursday, and Friday. And on Friday, you could see that the strength was weakening. Let me actually pull up RSI here. So RSI, lower highs and higher highs in price. So I would expect a pullback from these highs right here. But if we do get above this level, then keep an eye on this 35 EMA. If it holds as a support, the top of the implied move is 438. At 438, we will have reached extremely overbought on the week. And then to the downside, we do have that 35 EMA. That has been a big support level for us all the way from here where we bounced on this was the FOMC rate cut gap. So we were building support many times on this level, but once we got above that 35 EMA, it was a pretty strong support. We dropped down underneath here, but we got right back up, no follow through to the downside. So we just kept using that as support. So that is right underneath us. Considering the bearish divergence right here in Stupid Willie, we definitely can get underneath that level. So the next level to look for would be right here. This was a resistance that we turned into a support along with that 35 EMA. So that is 430.77. I would round that down to 430. And then if that breaks, the next support really is right here at the bottom of the implied move for the week. So 427 is current support, and then we have this 30-minute 200 moving average sneaking into the bottom of our trading range to catch us if we do fall towards the end of the week. So there you have it, guys. Lots to know about, lots to look for, and you have everything you need to have an awesome trading day tomorrow. I will have the charts for Tesla and Amazon later in the week. Tesla I'll have in tomorrow's video, but if there's anything else you guys are playing this week, let me know and I'll get those charts worked up as well. Otherwise, have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.